Welcome back to Synaptic Dividends. Today, we're taking a close look at the numbers behind a true dividend giant, ExxonMobil. We're here to answer a really simple but super important question. Is ExxonMobil's massive dividend a reliable gusher of cash that you can count on year after year? Or is it secretly running on fumes? The great thing is, we don't have to guess. The answer isn't in some crystal ball, it's right here in the numbers. So let's get into it. Okay. First things first, and this is the most important question for any dividend investor. Is it safe? We have to know if the company is actually making enough cold, hard cash to cover that payout. And to figure that out, we're going to use my absolute favorite metric, the free cash flow payout ratio. Now, don't let that fancy name fool you. All it does is tell us what slice of the company's real, actual cash profit is being sent out to shareholders. The lower the percentage, the bigger the safety net. It's that simple. So what's the magic number for Exxon? Well, over the last 12 months, it's just 60.8%. Think about it like this. For every single dollar of cash that came in the door, they only needed about 61 cents to pay the dividend. That leaves a nearly 40-cent cushion. That's not just covered, that is very well covered. All right, so the dividend is safe today. That's awesome. But you know what's even better than a safe dividend? A dividend that's been safe for a long, long time. So let's check out the track record. And wow, what a track record it is. We're talking about 42 consecutive years of dividend growth. That's an incredible streak that puts Exxon in the elite club of dividend aristocrats. And it signals a serious, long-term commitment to paying shareholders. But hang on. A 42-year streak is amazing. But here's the real test, right? I mean, anyone can look good when the economy is humming and oil prices are high. But what happens when things go south? What happens when the world gets thrown into chaos? Let's put this dividend through the ultimate stress test. Think about the two biggest financial nightmares of our lifetime. In 2008, the entire global financial system was melting down. What did Exxon do? They didn't just pay their dividend, they hiked it by over 13%. Then, in 2020, the pandemic hits and demand for energy just falls off a cliff. And what happened? They raised it again. This shows the dividend isn't just something they do in good times. It is a core priority, no matter what. So after all that, let's bring it all home. We've looked at the safety, we've looked at the history. So what's the final verdict here? You know, the numbers really do tell a story, and it's a pretty compelling one. Let's recap. 1. The dividend is comfortably covered by cash flow. Check. 2. It's backed by over 4 decades of nonstop growth. Check. And 3. It has been battle-tested through the worst crises we've seen. Double check. So let's go back to that original question we asked. A reliable gusher of cash or running on fumes? Well, based on these core numbers, the evidence is overwhelming. This dividend isn't just a gusher, it's a financial engine that's been built to last. Of course, these numbers, as powerful as they are just the foundation. If you want to go deeper and understand the full business model, the competitive advantages, and the management behind these numbers, check out our long-form podcast analyses on our main channel, Synaptic Investing.